Hey everyone, welcome back to Corporate Dakota. Today, Profusa Incorporated just filed its quarterly report, a 10Q, and I'm seeing some really interesting moves happening with their cash as well as their stock price. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is really focused on biosensing technology, and it looks like they're making some big bets, but there are also some signals here about their cash situation that we need to unpack. Let's dive right into where the company stands financially. As of the 31st of March 2026, Profusa had a little over $375,000 in cash. That might sound like a lot, but compare that to the 31st of December 2025, when they had almost $1.8 million. So their cash on hand has dropped significantly in just 3 months. And here's another thing that jumps out. Their total current liabilities, the money they owe in the short term, jumped from about $22.3 million at the end of 2025 to over $29 million by March 2026. This is a big jump and means they have a lot of bills coming due soon. And if we look at total assets, they stand at just $862,000 as of the 31st of March 2026. This is much lower than the $3.7 million they had at the end of 2025. This combined with the increased liabilities paints a picture of a company facing some financial pressure. Now let's look at how they are performing in terms of making money and spending money. For the first quarter of 2026, Profusa reported a net loss of about $3.5 million. That is a bigger loss than the $2.7 million they lost in the same period last year, in 2025. Their research and development expenses went up quite a bit. In the first 3 months of 2026, they spent $1.1 million on R&D compared to just $434,000 in 2025. This is a 164% increase. They are clearly investing heavily in developing their biosensing technologies like their Lumee oxygen and Lumee glucose platforms. Their general and administrative costs also saw a massive jump, increasing by 189%. They spent $2.9 million on these expenses in the first quarter of 2026, up from about $1 million in 2025. This increase is largely due to higher legal, accounting, and other professional services costs, as well as increased insurance fees. This next item is a bit technical, but it is important. The company reported a loss of $797,000 due to changes in the value of their convertible notes. This is much higher than the $156,000 loss they had in the same period last year. It seems the value of these notes, which are like loans that can turn into stock, has decreased, causing a financial hit. On a brighter note, they recognized a significant gain of $1.4 million from the forgiveness of their Paycheck Protection Program loan. This helped offset some of the losses. When we look at the bottom line per S-hair, the net loss, per S-hair was $2.05 for the first quarter of 2026. This is a big jump down from a loss of $105 per S-hair in the first quarter of 2025. This reflects the impact of a reverse stock split that happened, where they effectively reduced the number of shares outstanding. Let's examine their cash flow to see how the company is managing its cash. In the first 3 months of 2026, Profusa used $2.6 million in operating activities. This means their core business operations are draining cash. Interestingly, they had cash coming in from investing activities, specifically $1.1 million from selling digital assets. The company decided to sell off its Bitcoin holdings, and this generated some cash. In their financing activities, they brought in $469,000 from something called ELOC, which stands for Equity Line of Credit. They also repaid some debt, leading to a small net increase in cash from financing. Now, this next part is crucial. The company's own report raises a going concern warning. This means there is substantial doubt about their ability to continue operating for the next year. They've had significant losses and a working capital deficit of around $28.4 million. The company has also been in trouble with the NASDAQ stock exchange. They received notices for not meeting certain listing requirements, like having enough market value and a minimum bid price for their stock. They have been working to fix this, and there was an appeal process. There is some good news here though. As of May 6, 2026, NASDAQ granted them a continued listing, but with certain conditions they need to transfer to the NASDAQ capital market, get stockholder approval for a reverse stock split, and meet minimum bid price and stockholders' equity requirements. This shows they are actively trying to stay listed, but it is a close call. Looking at what happened after the 31st of March 2026, things are still very active. The company issued more shares under their ELOC, raising about $400,000. They also settled some loans by issuing more stock. A major event is their agreement to acquire All the Know, how assets related to BioInsights LLC's Panomics assay for $30 million. This will be paid for with series of convertible preferred stock. This is a big strategic move, aiming to expand into drug discovery and precision medicine. However, the NASDAQ situation remains tense. Just before NASDAQ granted continued listing, they sent another notice about not meeting the minimum market value of publicly held shares. This is a clear sign of the pressures the company is under. Looking at their internal controls, management admits there are material weaknesses. These include issues with segregating duties in their financial closing process, a lack of review controls, and expertise for valuing financial instruments, and not enough technical accounting expertise for preparing their financial statements, according to generally accepted accounting principles, or GAAP. This is a significant concern as it can lead to errors in financial reporting. Profusa is really pushing forward with innovative technology in the biosensing space. The acquisition of BioInsights LLC is a bold step that could pay off big time if successful. They are clearly investing heavily in research and development, which is necessary for their industry. However, the financial picture is concerning. Their cash has dwindled, liabilities have grown, and they are facing serious questions about their ability to continue as a going concern. The multiple NASDAQ notices and the admission of material weaknesses in internal controls highlight the significant risks. The company is in a race to commercialize its products and secure funding to keep operations running and meet its obligations. It feels like they are walking a tightrope with potential high rewards but also serious risks of stumbling. The big question for me is whether their strategic investments will pay off quickly enough to avoid running out of cash or being delisted. The path forward for Profusa looks challenging, but their ambition in the high-growth biosensing market is undeniable. The research tools I use for these breakdowns are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.